ਦੇ ਦਿਲ ਪਰਦੇਸੀ ਨੂੰ ਤੈਨੂੰ ਨਿਤ ਦਾ ਰੋਣਾ ਪੈ ਜਾਊਗਾ ਨਾਲ ਰੰਜੇਟੇ ਜੋਗੀ ਦੇ ਤੈਨੂੰ ਜੋਗਣ ਹੋਣਾ ਪੈ ਜਾਊਗਾ
ਇਸ਼ਕ ਦੇ ਲਿਆ ਜ਼ਖਮਾਂ ਦੇ ਖੁਦ ਹੱਸ ਕੇ ਮੂੰਹ ਸੀ ਲਾਂਗੀ ਜੇ ਯਾਰ ਮੇਰਾ ਮੈਨੂੰ ਜ਼ਹਿਰ ਦੇ ਮੈਂ ਘਟ ਘਟ ਕਰਕੇ ਪੀ ਲਾਂਗੀ
Hey everyone, welcome to Flywheel DeFi, your number one source for everything Frax, DeFi, and everything in between. If you want to know what's going on in the world on chain, you've come to the right place. This is DeFi Dave, here with capital K, and we're here to help you harness the power of the flywheel. And this time around, we got a load of the Bitcoin flywheel and what's going on with Bitcoin and DeFi with Mr. Spadaboom, the founder of BadgerDAO. This one, we get into the weeds about what it's like being a builder. What's it like building with Bitcoin and DeFi? What's it like working with DAOs? And, he shared some opinions about Bitcoin, which may surprise a few. Kiet, what are some thoughts about this one?
I think Mr. Boom came on here and just kind of dropped the mic. And he just really, because I really didn't keep up with the whole DeFi, Bitcoin and DeFi space. And he's kind of at the forefront of that, been building since 2019. Guys, 2019. So
ancient
he's
history.
Definitely an OG. Ancient history. That's pre-DeFi summer, right? And
you can say when he dropped his mic, there was a boom.
Yes. Bada bing, spada boom, So
Bada
I
bing,
feel
bada
like,
boom.
So he is definitely at the forefront of that. And this new product, man, this new product is exciting that Badger is about to drop. I think it's really going to bring it to the forefront. It's going to bring DeFi, make Bitcoin DeFi great again. This is what I think is going to happen.
Incredibly useful. And we go into a deep dive on that EBTC product right in our Substack. So go down below, make sure you subscribe and get all the latest alpha in that. We go into it right in our interview. And if you want any alpha whatsoever, keep up with us. Hit that bell button right now. Subscribe. Leave us a comment. Let us know what you think. Give us a thumbs up. Don't forget to follow us on Twitter at Flywheel DeFi. Join the conversation at Flywheel DeFi on Telegram. You can follow me on Twitter at DeFi Dave22.
You can follow me at 0xcapital_K.
And let's get the flywheel spinning. Do you hold ETH but don't know what to do with it? Want to earn those juicy liquid staking derivative yields but don't know where to start? Well, FrxETH is there for you. FrxETH is Frax's native LSD solution, allowing you to earn boosted yields in multiple ways on your ETH. If you want to get started, go to app.frax.finance and turn your ETH into FrxETH today. Thank you, everyone, for joining us for this episode of Flywheel. Today, we have on the founder and lead shepherd leading the Bitcoin front on DeFi in a multi-chain world. We have on Spadaboom. Spadaboom.
What's
Thank
up,
you for
boys?
joining us.
Thank you for having me.
Yeah.
What an intro. That intro was fantastic. I gotta say.
Thank you. Yeah, I love just improvising and just like rolling off the tongue. It's just so much more fun like that.
Nice.
And I'm really excited for this interview because you reached out saying how much you like the podcast, and I've been a fan of BadgerDAO since you guys launched back post DeFi summer in the DeFi winter, and it was just really cool because I remember that airdrop. Because if you just participated in DeFi in some form, you got the airdrop in some way, and I'm like, oh, this is sweet. And I like the whole idea of being positive sum, and it's like, how can we unite the Bitcoin world and the Ethereum world at the time? Like multi-chain wasn't really a thing. It was still mostly just everything on Ethereum. But at the time, I thought it was really nice because I'm just like, why are we fighting? Like we're all in this together. And so let's go into.
Yeah, dude, I was just saying that, man. I was just saying that right before on a call just before this. And, that airdrop in particular, was Uniswap-esque, but inspired by, in that at that time, about 19 actions across a variety of different DeFi protocols and supporting public goods and things along those lines. But, it does show the power in certain instances, of being able to use on-chain data to target and align the potential customers or users of a protocol and application. Like, often we talk about the inefficiencies in Web3 as relates to user acquisition, but, it's pretty efficient to be able to say, hey, look, this address, I don't care who it is, could be Dave, could be Chris, could be Bob, doesn't matter, has, I don't know, $100 million worth of Bitcoin being used in these 3 applications for this period of time. And that is a potential candidate for this product that we're building. Let's try and engage them and build some type of alignment between what we're giving them and the product that's being built.
Do you have any data on the retention from that airdrop? Or do you have any idea of, how that distribution affected the future of Badger after it launched?
Oh, it was massive for bootstrapping the community. Within that, from that point of the airdrop to, I don't know, a month and a half later, the number of Badger token holders just grew exponentially to almost like at that point 25,000. And I can't remember how many people claimed. I have all the broken down data. I haven't looked at it in a long time. It's wild to think about it, but that was 2.5 years ago.
Yeah.
But
it feels like forever. Like it's weird because it feels like it just happened.
There was a huge lift in kind of all core metrics, capital in the products, community members in the Discord, token holders, forum participants, like snapshot voters, all the things that you would look at, because we kind of started with one big bang. It was like, here's the airdrop, here's the app, here's the DAO, here's the forum, here's the this, here's the that. Like, let's all jump in. And it was pretty chaotic, as you would imagine. I'm looking at myself now being like, my bags probably haven't been this big under my eyes since the airdrop. So like that shows you we're in some type of bear market and we're grinding our face off. You know what I mean?
Yeah. So for the people at home that may be unfamiliar, maybe they're newer to DeFi, maybe they're newer to Frax and this whole ecosystem. What is Badger? What are the products you guys built? And what do you guys have in store in the future? Because you announced something really exciting with LSDs.
Yeah, so for folks that don't know Badger, as we've kind of been talking about, it's been a few years, but Badger's a DAO that really has a clear focus and mission, and that's to bring Bitcoin to DeFi and accelerate this ecosystem of builders that have a similar belief in that ethos and really want to contribute to making that a reality. So over the course of the last 2 years, we've launched a variety of different protocols and products to different active contributors within the DAO. From yield aggregation products, or some call vaults, to interest-bearing Bitcoin, to a native Bitcoin bridge, to an algorithmic Bitcoin, to liquid lockers for CVX. And maybe this is where a lot of the Frax folks or that community would know us from. We were one of the first protocols to launch a liquid locker for CVX. And subsequently, quickly became one of the largest kind of holders of CVX. And this is, I don't know, within the month or two when CVX launched, in that range. Done the same thing kind of within the Aura ecosystem, with Gravy Aura being the only liquid locker on top of Balancer. And we've been very active from, a treasury participation, treasury influence kind of standpoint, active user of FrxBP. Our protocol, is a very active user in the hidden hand ecosystem and Vodium ecosystem. I think we've been one of the only, bribers on Frax and hidden hand for the last 2 or 3 months, something along those lines. But yeah, we've built a variety of protocols. And, I would say, to be totally frank, in the protocols and products that saw pretty short-term oriented success that was probably tied closer to the bull market and some of the craze that went on during that time. Our vault product accelerated to, almost $3 billion, and, interest-bearing Bitcoin got up to 500 million in total minted, and our bridge had $1 billion in volume go through it, and a variety of things. But, as the bull market kind of subsided and certain protocols kind of fell to the wayside, like Ren, and certain products needed to be deprecated, and yields kind of got crushed, it made it very clear that some of these things weren't built for the long haul. And that's, that kind of ties into the recent announcement that the recent introduction of EBTC that we brought to market last week. But, about 7 months ago, we said to ourselves, okay, we now have a much clearer understanding of not only how to do these types of things, but the on-chain data that helps us qualify how those products and protocols are performing, because a lot of that data was hard to get in the past, across like 250 addresses and all these different kind of pieces to the puzzle. But being able to look at that and say, a lot of these products are not working. They don't meet certain policies that have been approved within the DAO around when to keep things or when to deprecate things. So we work towards deprecating those things, deprecated in support of, the REM protocol being shut down. And we said, you know what, we want to build a primitive that sits at the foundation of DeFi, akin to Frax, right? Versus building apps 6-7 layers on top of DeFi. And we saw this, enormous opportunity for a more decentralized Bitcoin, one that was completely on chain, smart contract based, was not relying on bridges, and was, obviously completely transparent, so that a user and holder or whatever within seconds on their phone can determine the solvency of the asset that they're holding, which, over the course of last year, we saw time and time again, primarily off-chain, how that was not the case. And there was a lot of issues with some of those designs and centralized entities supporting those. So, with EBTC, we finally have an opportunity after the merge with proof of stake that allows for this convergence, to your point, Dave, around, ETH and Bitcoin, right? Always fighting heads, always maximalism, at the forefront. And with all the products that we created and protocols that we created, we didn't have an opportunity to really tie these things together. We were always just kind of stretching to make it happen. And because of that, needed to use external incentives that weren't sustainable, built on things that weren't as decentralized as we'd want them to be, and do that type of stuff. But now, in a post-merge world, we finally have this opportunity. And, with EBTC, in terms of like its underlying mechanics, it's backed exclusively by liquid staked ETH, and it's an over collateralized synthetic Bitcoin that anybody could mint or borrow against their LSD. And naturally, similar to things like, I guess you could say like DAI, right? Being a CDP based protocol, it enables anybody to borrow Bitcoin. And unlike many other protocols of a similar nature, there's no fees associated with it. And why is that possible? Is because of, the ETH staking layer. You can bring these economics to protocol design that we couldn't bring before. So in our case, it's all right, you can use an LSD to borrow Bitcoin, which opens up long ETH, short BTC trade on loop, right? The flipping and trade, which is really cool. You don't need to charge borrowing fees, interest fees, minting fees, redemption fees, none of those things. And you can take a percentage of the yield from the underlying collateral, and that is what can fuel the protocol. And then you could use a percentage of that yield and repurpose it to drive utility on the actual synthetic Bitcoin. So what situation are you avoiding there? The lack of sustainability in incentives to drive and accelerate growth, right? You look at something like Frax. Frax did a phenomenal job in accelerating its growth and assets in market during, late 21, when the bribe market and the efficiencies on those bribes were through the roof. And, I could imagine, in talking to Sam quite a few times, you look at it and say, well, if we want to maintain $1 billion in Frax that's sitting in curve pools, we obviously need to have some type of vote influence. How do we get that influence? What's the minimum amount of influence? And then being able to sit back and say, like, that is a strategy to, kind of reach that threshold and maintain that threshold, versus a threshold where it goes to 3 billion and then back to 50 million, like some other, synthetic asset stablecoin protocols have faced. So, that's what we've thought a lot about. And we feel like with the design of EBTC in particular, the utility can scale with with the underlying collateral, which is obviously over collateralized. It introduces capital efficiency as a composable borrowing facility, and it finally unlocks the opportunity that exists with bringing ETH staking yield to Bitcoin.
So, what challenges does EBTC face when it goes live to market? Like, how does it maintain peg? I know it's a soft peg, but how do you ensure there's liquidity? What is your plan for all that?
Yeah, so the contracts are gonna be immutable at launch. Obviously, we're gonna have a very strenuous security exercise leading into it. For anybody that's listening that participates in Code Arena, kind of keep your eyes out for that, and a variety of other security audits that we're gonna have. But to bootstrap launch, really, it's gonna first start with the BadgerDAO treasury. The treasury has a substantial position in WBTC and in ETH. I think the treasury today is about 40 million, to which 65% of that is not in Badger. And there's about 35% of current Badger on-chain liquidity, which is 75% of the actual fully diluted supply. But the BadgerDAO treasury has that as protocol-owned liquidity, which is most of it's tied to WBTC. So I'm being able to kind of shift that over and bootstrap this protocol along with our existing influence in the Curve and Convex ecosystems and Balancer and Aura. It's really about just getting that ball rolling, right? Getting that ball rolling, and then enabling those underlying mechanics of the ETH staking yield repurposing to potentially participate, in bribe markets and drive efficiencies to those existing LPs. And then in terms of peg stability on the floor, we intend to have redemption, so the ability for anybody to redeem EBTC for the price of Bitcoin against staked ETH, like an LSD. And on the ceiling, we intend to have a tight collateralization ratio because of the nature of these assets being so correlated. You can get much more strict or tighter on that collateralization ratio, which obviously speaks to having a ceiling. And that's really to get out of the gate, get the wheels turning, bootstrap some liquidity, get things going. And then from there, we intend to introduce and ideally have this ecosystem of builders, because that's a big foot forward for us with this protocol is, we want as many great builders, as many teams to build on and integrate EBTC, and with that potentially bring some additional peg stability mechanics to market. If those are things similar to that of AMOs, peg stability modules in different forms and fashions, and just new and innovative ways to drive and keep peg. And I also think using a percentage of the staking yield as a way of kind of fluctuating interest rates to drive that peg stability is also very interesting. But we want to bring a base protocol to market. Again, get the ball going, and then build some unique things on top in collaboration with the ecosystem.
Yeah, if I had to make an observation about BadgerDAO and its evolution, it seems like at first you guys were hunting for Bitcoin-based yield on-chain, and that was your primary service. But over time, you evolved into basically becoming focusing on Bitcoin-based, Bitcoin-pegged stablecoins, whether it's the algorithmic one that you had, the interest-bearing one, or now EBTC, and that's a really cool niche, because no one else is doing that, and it's important to have that. Especially Bitcoin is still the big dog. Sometimes we forget, being in ETH land or multi-chain land, that we forget there's this whole other ecosystem that's actually still number one over here and growing in utility, as we'll get into with the Ordinals and stuff. So it's important that we still have that diplomatic connection from here. Is that a good observation?
Yeah, dude, the fact of the matter is like, being the largest cryptocurrency in the world, the longest standing cryptocurrency, the largest market cap, the largest number of holders, there's obviously an appetite for people to do things with it.
Yeah.
And that appetite doesn't exist on the native chain, the native Bitcoin chain. And a lot of the barriers, like, here's some interesting stats. A lot of people haven't looked into some of these stats, but they're pretty interesting. What I deem to be the case is that native Bitcoin holders, for the most part, aren't that excited about using Bitcoin on ETH, EVM compatible chains, alternative layer 1s or layer 2s. And the proof to kind of the data to support that, is when you look at the amount of Bitcoin that's been brought into Ethereum, most of it, I think the number is something staggering, like 60% of it, no, 70% was minted by two groups, right? Because most of the Bitcoin on ETH is permission. You have to be a permission merchant and you have to be onboarded with BitGo. So two of those groups were 3AC and Alameda. So you got two groups that obviously were using that permission state to be able to take advantage and arbitrage the asymmetric information between retail users depositing or LPs giving them Bitcoin, and then their ability to actually use it. I'm sure in protocols that were offering the ability to use it back then and continue to do so. And then subsequently, since they've gone away, the Bitcoin supply on Ethereum has shrunk by 40%. But what's really interesting is you then look at, what's happening with that other 40, what's happening with that other 60%. Well, it's sitting in protocols like Maker, Aave, Compound, Uniswap, which are, literally represent almost all of the Bitcoin on ETH, or most of it. They're using it as collateral, right? It's obviously a very prestigious collateral asset. And then slowly but surely, if we can find new ways to drive utility for it, the appetite will continue to grow. And we learned from first experience, to your point, Dave, around our past history. That was the barrier we kept running into, which was, one, we weren't confident and comfortable with the representations of Bitcoin on Ethereum. But then in trying to build applications and protocols to drive the utility on those things, we couldn't do it by ourselves, right? We weren't in a position where, the DAO had hundreds of millions of dollars of influence in certain ecosystems to be able to make that a reality, like on Curve and Convex, right? Or whatever it may be. So we continued to find ourselves in a position where, to drive substantial usage, it required those additional incentives. And those incentives just weren't sustainable, and the ability to get them sustainable is what was stunting the overall utility and the ability to grow that over time. So again, in this new world, in this post merge world, I think these opportunities open up, and sustainability in utility of Bitcoin in this ecosystem can grow. And I think with the overall appetite being there for more native DeFi users to want to use that versus Bitcoin holders, the demand, I think, can grow to places we never thought possible.
Where do you think it can grow outside of collateral? Do you think it's from like new institutional players coming in? Do you think it's something that hasn't been even discussed yet? What do you think?
Well, even basic stuff, right? Like LPing, yield, like even those two things can grow it. Like I think the market cap right now on Bitcoin on ETH is something like $3.5 or $4 billion or something. Like pretty easy to see. I think at one point on Curve, there was $3 or $4 billion worth of WBTC sitting there, right? So like to see, an attractive and consistent yield on even just Curve, one protocol, that in itself could probably help drive it to 500 million or $1 billion additional. So I think, I actually, and I'm a bit biased being a long-term Bitcoin and ETH holder, I think it's a multi-trillion-dollar opportunity in the end of the day. But basic things like being able to run different types of on-chain strategies, options, derivative, leverage, obviously lending,
the BTC
LPing.
trade, the long ETH, short BTC trade that you talked about. That's what you're building, is like that as a service, like a vault like that as a service.
Yeah, what's actually cool is it feeds both sides, right? So if you're like, I think that ETH's going to flip Bitcoin, and I have a high level of conviction. Okay, cool. One click of a button, do that at 10x leverage with complete transparency and confidence in, you know, the underlying infrastructure supporting that. And then what that does is that's, you know, creating this opportunity to drive a bunch of yield or utility or repurposed incentives for the people that actually just want to hold EBTC, maybe because it's more decentralized, because it's, you know, their trust factor in the underlying contracts, the yield opportunities, the ability to LP. So they're participating there, and they're almost benefiting from folks that are getting a different type of service, right? This ability to long ETH, short Bitcoin. And then the yield is, or the incentives are significantly amplified on this side because there's such a small percentage of EBTC being used here versus the collateral that was used to make that a reality, and the yield on the overall collateral that's enabling that. So it's just like a world where, you know, the Bitcoiners and the ETH people and the ETH ecosystem can come together in a way that benefits both, right? I want to short Bitcoin and I believe in the flippening. Great, here's a big red button. Boom, there you're rocking and rolling. And then on the flip side, I want to hold Bitcoin and DeFi and use it. Great, I can do it with an asset that has better decentralized properties than what exists today. And I have confidence in the sustainability of how I'm using it and the incentives that are driving me to use it.
Yeah. Kiet, you're a residence finance dude, so I'm sure you had some questions.
So I got a question, Mr. Boom, on the designing of how the EBTC and the yield staking reward kind of works. So there's no fee for redemption, we'll draw all of that because you are taking a portion of the staking rewards from all the LSDs, but that's just for Badger, right? How about for the folks who are, you know, holding the EBTC at the end of the day? Do they also get a piece of the LSD staking yields?
Well, the intention, there's just only one piece, right? Like I think it's unrealistic to think with how competitive LSDs are, and honestly how competitive it's going to be. Like we're talking about each staking layer is going to change the world, in my opinion.
Yeah.
But you know, there's only so much of the pie you can cut, and there needs to be a strong value exchange. So the idea is that percentage that's going to Badger is completely going to be repurposed to drive the utility for the holders, at least in the early stages in the bootstrapping phases, to get things off the ground. And I can imagine a time where, you know, if there's that much fees, you know, coming here, you know, you could parse it out in a way with, you know, some data to support it, to maybe, you know, drive incentives for not only just, you know, EBTC utility, maybe it's like EBTC utility in this protocol, EBTC utility in that protocol, that protocol, or something more akin to like FrxBP, where if someone pairs with this, you can get a percentage that goes in incentives towards something, right? Like I think the opportunities are kind of endless there.
No, I think that's super sick that you're using, you know, LSD as the collateral to mint. You know, I'm sure you got way more products in mind, starting with just EBTC. But I would imagine for the folks who are, hey, I want to hold BTC, but I want to get much more utility out of it than just holding it on the Bitcoin blockchain. I can hold it here in EBTC while earning a portion of the ETH staking yields. It's now you're intertwining the design of ETH with like the ideology of like a BTC holder, right? Like I want the most pristine asset in the world, but I also want yield from it. And then you get yield from the second most
like
pristine asset in the world.
Who doesn't want yield? Right? Like, dude, so like that's what always baffled me. It's like, you know, I'm sitting around with Bitcoin. I haven't touched Bitcoin on the Bitcoin chain, I don't know, since like 2015 or 16. I don't even know anymore. Like for what? It's like, it's great. It's sitting around. I don't need to touch it. I don't need to worry about it. I feel confident in, you know, the how it's being stored. But yeah, like when it comes to utility, again, I just think, you know, the ETH staking layer and what's coming from that, like it's going to change the whole world as it relates to protocols, products, companies, the risk-free rate of return, some of the best yield of any asset class anywhere in the whole world in a sustainable way that's fueling like this whole, decentralized future in crypto economy. Like it's totally crazy what I think is going to happen in the near future.
Yeah. And go ahead, Kiet.
No. I just wanted to add this last point is that like in my mind, I'm already thinking of like, a really sick product would be if you're able to incorporate with any of these perpetual exchanges. It's like, hey, I'm going to take my LSDs, mint my EBTC, use EBTC as collateral, short all the ETH notional so that I am flat on ETH and I just have, BTC exposure with ETH staking yields, right? Like product like that is just super clean. You don't have to worry about any other price exposure.
There's just so many. There's so many options. Like even you think about like minting EBTC versus your staked ETH, putting it in something like FrxLand, getting Frax, using that Frax to either short or long the ETH USD fee, because you're already short ETH BTC, but you think that the ETH price is still going to go up in USD terms, or doing something interesting around like the Bitcoin USD, or even something like, getting delta neutrality off of like using staked ETH, borrow Bitcoin, LP in EBTC staked ETH pool to build some neutrality there. Or like, again, the opportunities are endless. And that's what's so great about it. It's like completely composable. Anybody can integrate it. Anybody can do whatever the hell they want to do with it. And they can feel confident that, again, like the asset, like, and there's different, like you can integrate the borrowing functionality or this kind of unique long short functionality in a variety of ways, but even integrating just the asset for it being, and I think that's where there's a unique opportunity here too. It's like, you think about Bitcoin in DeFi, like no one's advocating for it. Like no one's advocating. It's like taboo, right? You like, it's like really taboo when you think about it. So when you imagine like, the ability to build an ecosystem of people building really great things on top of protocols or whatever, you need evangelization. You need things that drive them to be excited, to partner, to integrate, to build with, to do all that type of stuff.
Yep.
And I think that's one of the unique positions Badger's in, definitely in comparison to, the quote unquote, incumbent that exists, which, there's no shade being thrown. I'm a holder, a big fan, and for that specific purpose. But like this evangelization, I think could have, the next wave of protocols building on top of something like EBTC. And what that naturally will do will just remove some of the censorship risks that exist today at the foundation of DeFi, right? Because DeFi is built on the back of ETH, thankfully, right? A completely centralized Bitcoin and a bunch of centralized or partially centralized stablecoins. Like that is DeFi, right? Taking off, our bags and not thinking about those things. Like that's what it looks like. And that's scary. Like that is not what DeFi is intended to be. So we most certainly need to, bring some more censorship resistance to that base layer and increase the decentralized footprint at the foundation.
Yeah, and that's the next point I want to get to is trustless BTC on ETH or multi-chain possible? And if it is, what does it look like?
Yeah, I think it's one that's native to the network and is not relying on bridges, in my opinion. I think there's a ways to go, and I don't think they actually bring that much value. I hate to say it like that when it comes to Bitcoin in particular, but why can't we have, like, you got to think about like what makes a synthetic asset or a representation of another asset, even if it's a non-crypto asset, even usable or I don't want to use the term valuable, but prominent in the crypto land. And a lot of it is price feeds and the consistency and reliability of those price feeds, right? So just like even if you think about gold, what percentage of gold is, gold traded is paper gold versus physical gold? Like most of it is just a synthetic version of that. So I think there's just that much more of an opportunity for a representation for Bitcoin that's smart contract only, that leverages the price feeds and the reliability of arguably the most secure price feeds that exist in crypto, right? Obviously, they're going to be based off of Bitcoin and based off of ETH, since they're the longest standing assets. And that's where I see, that opportunity. And I think that opportunity can be much, much bigger than anyone building on Bitcoin or anyone trying to convince those on Bitcoin to bring it to ETH.
Yeah, interesting. You're right about the price feeds. The Bitcoin and Ethereum price feeds are the strongest in existence for any asset, which makes more of a case for a product like yours. And the fact that, as you point out, most Bitcoiners just want to stay on Bitcoin and don't want to come over to ETH or whatever, even builds more of a case for what you're saying.
Yeah, and then most of these people also use centralized exchanges. Mm-hmm. So for them to go to a centralized exchange and swap, their native Bitcoin for a synthetic version, that's also not unexpected. That's not unrealistic, right? That avoids this need. Don't get me wrong, bridges serve their purpose, but they're they're needed, and there is going to be decentralized bridges, and these bridges are going to drive substantial amount of capital and connect these two chains and other chains, most certainly. But I just think there's going to be a variety of alternatives for all different types of users, right? We start seeing things like Base that was announced last week from Coinbase, right? If you have just out of simplicity, if you have a Coinbase wallet and you have assets on that wallet and you're already onboarded, and with the click of a button, the same way you were trading Bitcoin or ETH for Doge or SHIB or whatever the heck, you can swap into something, and then another click of a button, you can earn 4%. That's a much, much different experience than, oh, I have to bridge, I got to wait X amount of time, I got to manage 2 different block explorers, I got to hold my breath in case shit doesn't get there. I then got to get there, and I got to go and deposit it into an LP. I then got to stake that LP in this other protocol. I then going to do these things with this wallet and that wallet, and I got to make sure I have ETH over here. That's ridiculous, right? That's not the quote unquote retail user by any means, but there's a space for that, right? Just like in traditional finance, there's just a whole layer, a whole stack of different layers with different participants with different appetites, different risk profiles, different capital allocation parameters. And then we're going to see the same thing.
Yeah. What are your thoughts on the action that's going on in Bitcoin right now with Ordinals? Because honestly, I think Ordinals are just super sick. I'm definitely have a soft spot for them. I think the whole I loved how they rolled it out with. I think inscriptions is such a great name for an NFT. I'm just wondering what your thoughts are with Ordinals, and will that open some minds to be hey, maybe there's actually stuff I can do with Bitcoin other than just hold it. Maybe it will, get them to bridge off, or who knows.
Yeah, listen, I'm all for more utility on the Bitcoin chain. Now, how scalable is that utility? That's an interesting question. And even for those that have used Ordinals or other NFTs on Bitcoin, it's nowhere close to as seamless of a user experience than what you would find on ETH or other NFT-oriented chains. The one thing that kind of rubs me the wrong way and has kind of turned me off a bit to it is, I remember when NFTs on ETH were really picking up steam, when CryptoPunks really started to, it must have been I don't know, March of 21 or something like that, April, May. And all there was shade and hate coming from people in the Bitcoin community joking, right click save, what a joke, what a joke, what a joke. And now these same people are coming on and saying, oh, one of the coolest and best things that's happening in Bitcoin to show you that Bitcoin is such a great network that you can build anything on is NFTs. It's yo, give me a fucking break. It's don't talk one way out of your mouth and another way out of your ass, right? Like, I'm all for it. I think it's great. What really rubs me the wrong way is when people say one thing, flip the script, say it another way when nothing's really changed. If anything, it's just supporting their bags and what they want to see happen, even overlooking the limitations, especially today from a user experience and from an onboarding perspective, right? So that's I'm excited to see what happens there. I'm not overly enthusiastic. I'll just kind of put it that way.
Yeah, it's more like show me incentive, I'll show you an outcome. And all these people were throwing shade and hating on Bitcoin, hating on NFTs on other chains, when basically they're doing the same thing. At the end of the day, it's all social consensus. It's like people agree, like, okay, this Satoshi has value, or like, okay, this NFT, this ERC 721 has value. And at the that's what matters most. It doesn't, and someone's incentives or bags, it's just irrelevant to that.
Mm-hmm. Yeah. Totally.
Yeah. And what are your thoughts on, because of the whole Ordinals hype, it's kind of had this domino effect of people being excited, not only NFTs on Bitcoin, but DeFi on Bitcoin as well. There's, stacks, and there could be other things. Like, what are your thoughts on DeFi?
Why don't you continue that conversation? Why don't you continue that? There's stacks and then there's
other things.
No, there's RSK and stuff. No, listen, yeah, like
rootstock, yeah.
Yeah, like my I don't think it's like I genuinely think it's more narrative oriented and shilly-ish, but yeah, like I just can't see how, like, and I think I tweeted about it yesterday or today, I can't remember, but it was like the overall concept is, why would there be a flourishing ecosystem of DeFi on Bitcoin when there is no developer support, no toolkits, no primitives, nothing along those lines, when you could easily, with like, I don't even know what the ratio would be, 1/1000th of an ease of actually building something on ETH, any EVM compatible chain, NL2s that brings the same utility for a representation of Bitcoin in that ecosystem, right? Like, I can speak from firsthand experience. When we went on this journey to start building Badger, this was probably mid or late 2019, in that range. Being a long-term Bitcoin enthusiast, I started there, and the limitations were mind-blowing, and they haven't gotten much better. And today, to be able to build protocols and drive utility for Bitcoin, if that's what someone wants to do, and build an ecosystem around that, which I'm obviously working hard to try and make a reality, there needs to be an ecosystem to make that happen. And I think there's a really long way to go for that ecosystem to exist on Bitcoin, both from a technical limitation and also a social limitation, right? Like, even we were just talking about it. Look at, there's this whole divide. There's people saying, look how great NFTs are on Bitcoin. And then there's people like that are arguably well respected within that ecosystem, kind of damning the fact that this is even possible with NFTs, right? So I think there's going to be some pretty stark barriers. And even something like Stacks gets a lot of hate from those communities, although they've been actively building hard and kind of alone for a long time. But I just think it comes down to, I just think the opportunity for a Bitcoin representation in DeFi that lives on Ethereum, on any EVM compatible chains, on L2s, is going to be so much bigger, especially in the short term, than anything that's going to be built on Bitcoin to enable Bitcoin holders to get access to DeFi.
So, Spadaboom, I've always had this reservation with BTC, right? It's like, will it fade into irrelevance given how it used to be? It used to have the mantle of the most pristine form of collateral, the best type of money you can have. But in a post-merge world, that that kind of title is being seriously challenged by ETH. So like, I feel what you guys are building
I
at
think,
Badger is a way to keeping it relevant.
yeah, most certainly. That's definitely part of it. At the same time, I think that if we think too small like that, like in reality, how much of an impact is that going to have for this to be $1 trillion asset in the near term, right? Like that's too small thinking. Like there's, if you just look at global commodities or global assets and the foundation of infrastructure to allow for the largest investors and institutional, grade capital allocators and so forth to hold, trade, have all these products, derivatives that sit on top of it. Like Bitcoin hasn't even gotten there yet. We're still looking for like a spot ETF on like exchanges in North America. So I think there's still so much room, and it's just always. I think for the near term, it's always going to be Bitcoin. It's always going to be Bitcoin and ETH. I think Bitcoin has been able to get to a point where there's less fear over regulatory scrutiny on the asset, and that gives more confidence, I think, to like the quote unquote powers that be to like make it more of a traditional type tradable asset that it can find its way into those doors quicker and hopefully lead the way for something like Ethereum, if not at the same time. But I honestly, dude, I think it's just there's so much more to go before Bitcoin even hits the main stage. It's still this weird crypto thing that a bunch of Lambo guys bought and sell and shill with like dog analogies and like weird shit. Like people don't take it seriously at the quote unquote highest levels. I keep using those terms because it's like that's not. I think the future is gonna be a future that's driven by the little guy, right? It's going to be driven by code, not by this like hierarchy of old money and politics, excuse me, and just like power manipulation and all this type of stuff. I think that this is about disenfranchising that. Like that's what crypto's about. That's what Bitcoin's about. That's what ETH's about. So I think there's a ways to go before that becomes a reality. I think there's going to be a big bumpy road. They're not going to go out with a fight, and this is like long-term stuff. So I think as we get there and as we continue to go there, like you can't overlook the network security of the Bitcoin chain and how strong that security is over the course of 14 years. You can't overlook the number of Bitcoin holders that exist in the world, the number of integrations and waves, and just overall, even if you look at the crypto market, Bitcoin still like dominates from spot trading, derivative trading, perps, all that type of stuff. Right, it's still one of the most traded assets, and crypto for the most part is still primarily a speculative market. Like you don't have all these participants using DeFi. That's for sure. That there's only like 100 people using DeFi.
You're talking to 3% of the people right here.
Yeah, right here, right? Like,
100% of them listen to Flywheel, so they're all here. They're all listening.
Yeah.
But yeah, you bring up a really good point. With most of this is still in its nascent stages. Crypto, Bitcoin, especially DeFi, especially like this area of crypto, it's viewed as some exotic foreign thing that's like, what's going on over there? It kind of scares me. Let me just go on with the rest of my life. That's how 90% of people feel. And the challenge that crypto faces going into the next cycle is how do we change that from crypto being a place of speculation to a place of actual utility?
Agreed. I think, and that's something that you can even feel if you've been around a couple bear markets or even the last bear market. You couldn't do anything but capitulate into Bitcoin or ETH. Like it's not like you could hold the shitcoins that you bought at ridiculous valuations of garbage white paper to be like, oh, I'm gonna borrow some dollars against that. Oh, I'm going to go LP with that. Oh, I'm going to earn with that.
should,
that just didn't exist.
You should tell
It was
Alameda
that. Yeah. If the only option was hold it till it literally died, or capitulate at a point where you could just stay in the game. So the utility is already here for those active participants. But to your point, Dave, right? That's such a ridiculously small sliver of the opportunity and the actual participants. So hopefully those folks that are, listening to this, actively using crypto in this new economy also become the people that want to help move this forward and actually build towards this future, because that's just how that's the cyclical nature also of how this thing just continues to swell. The amount of builders that are building today is so much bigger than there was a few years ago, which was so much bigger than the years before that. And I think it's almost a rite of passage. The bear market's hurt so much, and they challenge you emotionally, financially. They challenge just your own self-worth, the decisions that you've made. In some instances, it challenges how you manage your family life and your business career and your professional career. So much of it's tied together, and those that are able to get through it and continue to keep the long-term vision of what could make crypto great, moving them on a day-to-day, and especially those that say I'm going to use that as fire to go all in now. That's why in a few years from now there's just going to be this huge wave or a bigger wave of builders that there was in the last the last cycle.
Yeah, absolutely. It's the fire that molds you. I mean, it happened to me, it happened to Kiet. And I honestly can't imagine doing anything else. And I think something that crypto needs to face in the future is being able to make bridges outside of crypto and being able to better inform people of what's actually going on and better inform. So it's not just oh, Dogecoin, oh, monkey pictures, oh, this, oh, that. It's we definitely have a challenge ahead of us. And I've been thinking about this a lot from the speech I've been writing for ETH Denver, which will be released after ETH Denver. So, for everyone that's listening, go listen to that. But what I was going to get to, going back to just DeFi and the 100 participants in DeFi, just kidding, but the few thousand or whoever participants in DeFi, in your experience in the past few years participating in DeFi, running a DAO, seeing, the cycles from DeFi summer, the food coins, and then to multi-chain madness, L1 cycle, blah, blah, blah. How has your DeFi thesis changed since then, and how has it evolved, and what things have you observed and noticed?
Yeah, it's a great question. I say, in 19 and 20, I was very much so a believer in, DAO through and through, both and decentralization through and through, both operationally and how an on-chain business that potentially creates decentralized technology should run, and of course the decentralization of the underlying technology, which when I think about how that's kind of changed, it's been more about being realistic with the inefficiencies that come in just as completely Wild West type on-chain organization, and the potential limitations that actually brings to build the DAO to a point where it's sufficiently decentralized. And when I think about that shift for me in my mind, I believe much more so in progressive decentralization at an operational level and more immediate decentralization at a technology level. So as we bring smart contracts to life, if we bring technology to life, we should do everything that we can within the limitations that exist today to be as decentralized and economically viable that you can be with this password censorship resistance, which of course isn't a reality today. And then on the operational side, in an on-chain business, it should have a framework that lends itself to become, ultra decentralized, but start with having decentralized properties. And one of the things I'm a big fan of is, having more isolated decisions by qualified groups or councils or representatives that represent the greater token holders, versus each token holder with that is lacking information, lacking a lot of the stuff that can enable them to make, the appropriate decision, or even the wherewithal. Why the hell do I want to vote on this thing or vote on that thing? Like, I don't give a shit, just want token price go up, right? Like, that's most folks. But if you can have more of this, like, representative democracy, where certain groups with qualified skill sets and competencies and commitment and passion to focused areas are almost voted in and have to continue to adhere to the standards of the community, while having a very, 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 like, as transparent on-chain operation as possible, from this number to that number. Like, everything needs to be in a place where people could actually see how this operation is functioning, to even get the type of wherewithal to want to contribute to one of those groups, or even give a shit to say, I can see some efficiencies here and here. How are you supposed to see efficiencies or be able to contribute to push things forward if you don't have the information? Never mind, it's one thing to have the information unguarded, meaning certain folks aren't holding that information to themselves, but it's another thing to be able to even display that information in an automated way on chain that anybody at any time can get a glimpse of and get a feel for. So I'd say that's probably been my biggest shift since like 2020, and that just comes from the realities of seeing how these DAOs kind of grow and flourish, outside of being an investor in probably 10 or 15 different DAOs and projects from the early stages to growing to be something much bigger, and even contributing and participating at Badger in a big way. Like, I like saying this. Everyone likes to talk about how they think DAO should run, but they've never fucking run a DAO. And I'm not saying I've run a DAO, but I've been involved in the weeds of what it looks like to go from here's an idea to let's build this community footprint and ecosystem around it and create some cool tech, to like, thousands and thousands of people wanting to get involved and participate in this way and take ownership around this and do this and that and this thing and that. And, so I think that's the reality. Is everyone wants to talk about how DAO should run, but no one knows their head from their ass as it relates to running a DAO.
It's easy to be a commentator. It's hard to put your hands in the dirt and do the work.
Yeah, and running, and I just want to clarify, like, running the DAO, like, there shouldn't be a person running the DAO. When I use that term, I mean, actively participating in the inner workings of how those decisions actually come to light, which could mean being part of a council, which could mean being an active participant in token voting and electing certain council members. That could mean actually being, a compensated contributor, or having a level of ownership in a certain working group, if that's product, operational, technical, whatever it may be. So that's just wanted to clarify that, because that kind of comes off as like, an individual runs things, when it's far from the case. Trust me.
Nuance is important, and you can show nuance in podcasts, especially video podcasts. We're all for nuance.
Sweet.
Yeah, it's go ahead, Kent.
I just wanted to ask a couple more questions about the DAO stuff. It's like, from, arguably BadgerDAO has been one of the longest DeFi DAOs in the game, from the very beginning. Like, are there other DeFi DAOs that you kind of look to and be like, damn, they run a tight DAO? Are there any other good DAO role models that, some folks who wants to start their own DAO should be kind of studying right now?
Yeah, I'm a big fan of how Synthetics runs their DAO, and the Synthetics DAO. Again, from just being practical and making efficient decisions, right? They have councils with clear policies, clear parameters of the types of decisions that they make. They're held accountable by token holders with a cadence in reevaluating those participants and voting those folks in. They then continue to solicit community insight and feedback through an improvement proposal process, forums, and things along those lines. And it's more of like ingesting that information as an elected person would, to then make the best decision based on all that information in this given area, right? And having parameters around how to accelerate those decisions in emergency situations or whatever would need to happen. So I think that's great. And I'm a big fan of that. And it inspires to, we've thought about having an impact at Badger. I'd say Aave as well is another one. Aave, I think the way that they have very qualified groups, those could be DAOs, those could be service providers, those could be individuals or a group of individuals that have certain types of responsibilities, and then that's supported by their grant infrastructure, and those groups have, and like there's just delineation in who does what and why, again with complete on-chain transparency. If that's like the Llama crew, if that's the board Ghost development group, if that's Chaos Labs, if you know what I mean, like, you know, those right. Specific groups have certain focus areas. They deliver it at a very high level, super professional, reevaluate on a consistent basis, and knock it out of the park to keep the protocol and the subset of protocols running very smoothly. You know, that's much more efficient than like, hey, Dave, I want you to do risk management. You're like, yeah, no problem. There you go.
I got it. Put me in, coach.
Yeah, but that's how it is. Like, it's like you have randos that come in the community and they're just like, yeah, I want to own this. And it's like, okay, here's a try. And then like, you don't really like, DAOs don't really have a way of like onboarding or offboarding. So like, then they're in, and then they're like deeper in, and then they're like just doing a shit job. But like, how do you kind of manage that? So having those lines in the sand to enable decisions to be made by, you know, the folks with all the information, and for the benefit of, you know, the on-chain business, the protocol, the community, all keeping that in mind, I think it's aspirational and how things should be looked at. And then, you know, obviously want to give a shout out to Frax. I think Frax, you know, from how they organize their DAO and genuinely putting all decisions from front to back, you know, in the hands of the community members to vote, and in a very transparent way, which is 80% of the battle, right? You could only imagine protocols that call themselves DAOs, but decisions are being made, you know, well before they ever get to the point of having any type of token holder vote or insight, or feedback. But, you know, with them in particular, from the get-go till now, they've obviously, you know, worked towards being as transparent as possible. And yeah, that's what I'd say across the three DAOs.
Yeah, I think Frex has done a good job of developing these systems in place and categories in place for different topics and issues to be voted on. It could be as simple as getting a gauge, or it could be as complex as getting an AMO or a different partnership. Hell, I know going through that whole process very well through the grant, just getting grants over the past 8-9 months. It's a lot of politicking. It's a lot of, you know, listening to the community, making sure you have all your bases covered. And the Frax community in particular is very tedious, and they will, you know, tear your proposal limb from limb if you don't come with your shit right. And so that actually makes for like a higher
not much gets overall past the C2 and the Convex crew. So, you know, we all know that they have some influence. So you better be prepared
maybe
for the C2 scrutiny. I promise you that.
Yeah, I call it the C2 busting your balls. Honestly, he will. You have to go through the busting your balls, but like once you show that, you know, you're legit, you're real, like C2TP will work with you and is reasonable. Like everything, I think, like if you look at like Frax governance, like things that get approved and things that don't get approved, there's a legitimate reason why it doesn't get approved. And you know, sometimes people are like, you know, sour about that, but it's not like out of like nowhere just because like there's a reason. But yeah, the whole
well, and then Convex is another example of a DAO that like isolates certain decisions and chops up those decisions so the folks that care about it, right? Like, you know, an example of that, like most participants that want to hold and lock CVX really only give a shit about, outside of solvency of the on-chain protocol, but obviously where those emissions go and where that vote weight for curve goes. Like that's literally it.
That's it.
Wonderful. Give me that. I'm over the moon. Do I care about these other things? No. So like if you can make more efficient decisions with a group, and I do believe there always should be some level of temperature check, and the community should have a say, and there should be some type of evaluation process, and determining which smaller group makes these decisions and holding them accountable. But like it's not this everyone should have an input on everything. Let's figure out what are the things that token holders actually want to have an impact and influence on, and make that a reality, especially in the earliest days as you work towards progressively decentralizing, getting your feet under you, both from like an on-chain protocol and user and smart contract maturity and everything that you're building, right? Like there's nothing worse than putting a contract out there and you're also trying to organize operational stuff or vice versa, and then neglecting certain things on either side because they each have their own levels of importance. So often most of these contributor groups are much smaller, and those that are trying to make this a reality, like this decentralized future, they're not these large organizations with all these business units and all this type of stuff. So you put attention in one area, you have to take it away in the other area. So if you can eliminate as much of the noise to just focus on delivering on what needs to be delivered on, and then progress towards opening up that footprint over time in that feedback loop, I think you're better off.
Yeah, I just get flashbacks to the past 2 MCons I went to. I'm not sure if you went to those, Spadaboom, but MCon in 2021, it was kumbaya. DAOs were this new concept. It was exciting. I was like, yeah, we're going to change the world. Yeah, we're all going to work together. It's all going to be great. It was all, it's very kumbaya. And then MCon 2022 rolls around and it was like, all right, guys, we need to have standards. Some people don't reach those standards. Okay, we're going to have processes. It's like we learn the same lessons in human coordination over and over again, just with different technology. And DAOs were us learning those coordination problems and issues with blockchain, and hopefully using blockchain to quote unquote defeat Moloch and be more efficient and whatnot overall.
Totally.
But yeah, another DAO I think that is something to model off of is the Curve DAO. I think Curve has it's something to strive for with all their processes. And I just think of when they had that emergency situation. I think you remember that, I think it was either in 2021 or 2022 with Mochi, when Mochi was just gobbling up Convex or something, and they just cut down I forget exactly what happened, but do you remember what I'm talking about?
Yeah. They bought 1 million. Yeah. They used their LPs or their community to pretty much dump on them to buy CVX, and then it was just it was kind of crazy what they did. Yeah, but yeah, I agree. Yeah, Curve is another example. I think what's so aspirational about Curve is not only have they worked towards decentralizing the operations, but they've just continued to be a leader at bringing truly decentralized technology to the forefront, and the stuff that they build and the standard to which they build them. Again, because there's 2 lines, right? You can have this ridiculously decentralized organization with these very permissioned tech pieces or smart contracts or whatever, however you're building it, versus having some slighter points of decentralization on our operational side, but or more, and arguably more realistic kind of parameters in how decisions are made operationally, and much more decentralized tech that you bring to the forefront quicker.
Yeah, and I think Curve especially, it's important for them to be as decentralized as possible, because if you remember from our last interview, Kiet, with DeFi Cheetah, he calls Curve the pricing power for stablecoins, the point of pricing power for all stablecoins. If you want to check if a stablecoin's pegged, you go there. You don't even go to a centralized exchange. So in the future, when I hope payment stablecoins come online and are approved, and there's this whole new renaissance of stablecoins that make their way into DeFi, there's going to be one place for them to go to find yield and find liquidity and maintain their peg, and that's Curve. And you can't have that when you have billions, tens of billions, if not like trillions of dollars in a protocol. You can't have it just like in a multi-sig.
Agreed, man.
Yeah.
No doubt.
Agreed. And,
so guys, I shared a message, and just to be conscious to it for sure.
Got you. I got you. And Spadaboom, this has been such a great conversation, and I'm so glad you made the time to come onto the Flywheel and speak to the 100 DGen users who will definitely be using EBTC. But at the end of all these, I would like to get to know you more as the builder behind the project, the individual, the man himself. So we're starting with some rapid fire questions here. Is first, what was the first time you touched the blockchain? What was your virgin crypto experience? And sex don't count.
Sex doesn't count, eh? 2013, and I bought Bitcoin off of an Excel spreadsheet on a wall from a live auction on Wall Street at the Bitcoin Center.
Who's the guy at the Bitcoin Center? What was his name?
Nick Spiros.
Nick Spiros. Yes.
Oh, wow. Blast from the past. Okay. Second question. What is your favorite off-chain touch grass activity? What are some hobbies and interests of yours?
Working out. I used to be a competitive bodybuilder and playing basketball. Although I'm 5'7" on a good day Italian, I can shoot some hoops, and I've been playing for a while. So I love, even though I'm getting a little older here, I like to play basketball as frequent as I can, and also spend time with my kids. And I highly value family in my life.
I was going to say the comparisons with Frax and Badgers, the propensity towards weightlifting and also being positive sum. Like, you love that connection between the two communities. What's some advice that you would give to your younger self?
My advice would be to continue to keep the long-term picture in mind and invest as much time as consistently as possible at self-reflection and being both as harsh on yourself as you are lenient on yourself. Because, many times without a clear direction, it makes it harder to actually know where you're going and why, but it also makes you more willing to, beat yourself up and kick yourself in the teeth, when in some instances, it's really just part of the journey. And if you keep pushing towards, getting better every day at whatever you're doing and feeling confident that you're actually, giving it all you got, while having this bigger long-term goal in mind, you'll eventually get there. And I think, as individuals, we should always be lifelong learners and always just trying to be better at a bunch of cool new stuff, right? Like, by no means does that mean just professionally oriented. That could mean anything, right? You're 35, you want to start learning how to play golf, or you want to start, learning how to figure skate. You want to, do whatever. It's all possible. You just got to hit it.
And speaking of everything possible, this is the last question here is, if you weren't working in crypto, what would your professional career be?
I'm going to have to go with an athlete. I've had aspirations of being an athlete from the earliest days of my life. So I would say a professional athlete. That would be more specifically a basketball player.
I like that answer.
Great answer. Great answer.
Finally, like a physical answer. Spadaboom, thanks so much for coming on. Thanks for Bitcoin, not only just Bitcoin pilling us, but Bitcoin, like pilling us on Bitcoin all over the place.
Yeah, guys, listen, this is great. I'm really happy that you guys have been doubling down on this podcast. I feel like you've done a wonderful job. This is such a niche thing, right? And so many people really need to understand and learn more, because I just think this is the beginning. Like, there's you know, this even the word flywheel, like the flywheels that we're going to see in years to come are just going to be insanity. So definitely big kudos to you guys for grinding, for hitting it, for building in the bear market, for, you know, spreading the news and keeping everybody, you know, up to speed on what's going on. And, you know, let's keep hitting it together, man.
Yeah, we'll keep on building a bear. Thank you, everyone, for watching this episode of Flywheel DeFi. This time we had on Spadaboom at BadgerDAO. Badger, wait, what's the saying with Badger? Like, you know, honey badger, the honey badger. Yeah, that's it. You know, and is the honey sweet in Bitcoin DeFi? And as you said at the beginning, he's trying to make Bitcoin DeFi great again. Kiet, any final thoughts on this one?
I think people just got to go and listen to the post show.
Yeah, they got to listen to the post show.
We really went to town there.
Yeah, we got Sam on there. Sam has a lot to say. I have a lot to say. There's so many things I wanted to ask him, but we didn't get to. And we just go over all of that in the post game. So why don't you just head down there, go to our Substack, flywheeloutput.com, go to the link, subscribe, make sure you never miss a beat, and hit that bell button if you really want to never miss a beat. Make sure you catch every video, subscribe, leave us a comment, let us know what you think. Give us a thumbs up. We appreciate the love. And follow us on Twitter at Flywheel DeFi. Join the conversation at Flywheel DeFi. And you can follow me on Twitter at DeFi Dave 22.
You can follow me at 0xcapital_K.
And go to that post game right now. Do it. Go. Go. Everything said on this episode is not financial or tax advice. This channel is strictly for educational purposes and is not an investment advice or solicitation to buy or sell any assets or to make any financial decisions. This video is not tax advice whatsoever. Please talk to your accountant and do your own research.